Got it. Ladies and gentlemen, how you doing? Welcome to another episode of Sleep is for Billionaires, the podcast. I am your host, Shayanne Andujar, aka Johnny Vegas. Now today, I got a very special guest on my show, ladies and gentlemen. You are in for a treat, so take some notes. This gentleman is a very good friend of mine by the name of Adam Cohen. He is a successful entrepreneur with a stellar track record of business accomplishments and a reputation for proven and confident leadership, building from his first success at the age of 16 as a founder of one of London's first cellular telephone retailers. Mr. Cohen has achieved world class results in telecommunications and real estate industries and continues to take his sophisticated knowledge and hard won industry experience to the next level. Adam Cohen has created this group to feature products and services available through his organization and businesses, as well as to provide industry related motivational and educational materials. In some cases, participants in this group with Adam Cohen's written consent will also have the opportunity to feature their business on this page. Ladies and gentlemen, Mr. Adam Cohen. How you doing today, sir?
That's quite a mouthful, right? Uh,
I know. I know. Hey, listen, man.
and
I locate. You sent me your bio, and I told you I will read it word for word.
and
So,
you did. And for those of you watching at home, the group that we're referring to is a new LinkedIn group that we just started. Basically, really talking to the real estate community, people who are in business, entrepreneurs, real estate, the real estate world, the entrepreneurial world. It doesn't get any less confusing and it doesn't get any less challenging. And here to help people in real estate and in business and in finance, have great resources, learn new ideas, hear from other business leaders, and to really help people on their road to success, including participation with us, and in some cases, just giving great advice. So, Cheyenne, thank you for that.
no, thank you. Listen, thank you for joining me today. You've been a part of my journey from the beginning. When we met originally, I was in the beginning stages of Sleep is for Billionaires and episode 1, and now this is actually episode 158. So it's been quite the run. And this is their second time appearing on the show. You're actually the first repeat guest on my show, man. So this is a celebration within itself, man. So thank you again. No, but I'm not gonna lie. Through us being friends, I always admired your expertise in business. I always valued your advice, and I always, just your success is one to be studied. That's for sure. You taught me a lot. I mean, I was even thinking to myself, because I love the way I analyze information. I love the way I retain information. How I can not only speak quickly but listen quickly as well. And I learned a lot of that from being around you because you are a fast talking Englishman. And if someone listens slow, they are not going to keep up, especially when you don't like to repeat yourself. So I appreciate your existence for sure.
That is really true. I do not like to repeat myself or to do anything twice. If anyone knows me well, I'm like the second I'm gonna redo something, I am not a happy camper. But it's funny, I remember our last episode was probably around, correct me if I'm wrong, 8 or 9 years ago. It might have even been 10 years ago. How long
I,
have
I,
you
I,
been there?
I wouldn't say 10, but I would say it was definitely pre-pandemic.
It was like 18 or 19, I'm thinking.
I would say about 19 for
Yeah.
sure,
Yeah,
2019.
it's been a while. It's definitely been a while. I want to say
Long.
thank you for having me back, and I'm honored to be the first repeat guest.
Mhm.
Obviously, I would expect nothing less.
Right. Right. Well, you got a lot of interesting things coming along, man. Since I've known you, you've obviously been excelling in your real estate business. You started on the lending side, but now you got this interesting project that you're working on. In regards to real estate development along with cryptocurrency. Why don't you tell the people a little bit about that project and your and why the location you selected is the prime location of choice.
Okay, well, let me kind of just ease into that for a second. And as you mentioned, most people who will be watching this know me as a private lender, but that isn't really where my experience and my journey started. I
Mm,
originally got into real estate by accident. It was to fill a window of time. And I started
mm,
doing rentals, and from rentals to sales, and from sales to commercial, and from commercial to buying and selling and flipping, and then doing some development, then moving to the US and and more rinse and repeat. And the lending side is something I've been involved in since we're losing you there, Johnny, just so you know.
I'm here. I'm here. I'm
We
trying
can't
to.
see you. We lost your handsome face. There it is. There it is. And the lending side is something that I've always done. I kind of got involved in private lending when I was about 19 or 20 years old, really by accident. But long story short, I've been in the real estate industry for coming up for give or take 30 years. So I have just a little bit of experience.
Mhm,
If they were Joe Biden.
mhm,
So I didn't do the soft voice very well. Anyway,
mhm,
so real estate is my background, and over the last couple of years, we've noticed that lending is getting a bit more competitive, number one. Number two, there's uh, a lot of transactions just don't make sense. High interest rates, rising cost of living, like general cash flow for most borrowers not being what it used to be. And we're seeing business drop off a little bit, and that's okay. We expect that all sides of real estate and of business in general have an evolution to it. So a couple of years ago, we started launching a new concept for a new real estate fund, which we've done before, and just this time we wanted to do it a little differently. So we came up with a few concepts and a few ideas, and crypto, as we all know, is really taken off. It's kind of exploding now, and we're seeing more and more crypto millionaires than anyone ever thought we'd ever see. It's definitely become the new way to make money if you know how. And moving forward, we see that the best way to invest in real estate is really the marriage of real estate and crypto. They're like natural allies. They're the perfect metaphorical husband and wife. So we picked this project in Augusta, which is in Georgia. Augusta is the second largest city outside of Atlanta in the state of Georgia. And this is a great project simply because, one, it's going to be the only high-rise apartment building in the city of Augusta. And two, the location, it's amazing. You've got the entire cyber division of the US military now in Augusta. You have an enormous medical campus, which is honestly growing every year. 7, 8 minutes walk from the property. Augusta is famous for the US Masters, the golfing tournament, which is the biggest golfing tournament in the country, maybe the world. I'm not a golfer, so can't tell you an expert on that, but it's definitely the go-to event. I would tell you that if we only rented that building during the week of the Masters, we would break even. So that's kind of a
mhm,
crazy analogy. Obviously, that's not our intention. So we
mhm,
picked this building really because of its location, its uniqueness. It's like how often can you say you have the only high-rise apartment building? This is going to be the only luxury building. Everything else is garden style. Nothing else is walking distance of all the major businesses. So we have a really unique property, and that's why we picked it.
Awesome, awesome. Listen, I'm excited to help out with the project as well. I mean, everyone I shared the opportunity with, too, they're all excited about it. They all see the vision, especially like you said, it's a growing area. I even saw some documentaries about Augusta, Georgia, just growing within itself, how they're trying to develop a lot of infrastructure there. So you're catching it right at the cusp
Yeah.
of the development side. So
It's
awesome.
considered an opportunity zone, and you always want to do business in opportunity zones if you can, especially if you're trying to do real estate deals.
Absolutely. So tell me, what are the benefits of investing in a fund as opposed to the risk associated directly with investing in real estate, if that makes sense?
It makes sense if you don't think about it, right?
I mean, did I ask the question correctly?
You did, you did.
Okay.
The there are benefits of investing in real estate directly, but there are also disadvantages. So I was talking about this with one of my partners the other day.
Mm,
Most people who are looking to buy investment real estate, and there's different ways of buying. All right, so you're buying something to fix and flip, or you're buying a rental. There's problems that you run into. First of all, in most cases, you need to go and get a loan. So you're putting up a big deposit. It could be several $100,000. You're applying to multiple lenders, which all cost money, with no guarantee of getting a loan. And when you do finally get the loan, you've got to personally guarantee the money. You've got to pay that monthly mortgage every month without fail. If you're doing a fix and flip and contractors take longer than expected, then that's costing you one for their time and it's costing you on the mortgage as well. So what they call cost of overruns and delays definitely eat into your bottom line. And if you're doing a rental property and the tenants are paying a mortgage, then you are having to pay that mortgage out of your pocket. And so many times
mm,
we see that borrowers can't afford to make those payments and they're falling behind on their mortgages and their credit is falling. And then they start falling behind on their personal mortgage, trying to catch the other one up. And before you know it, the house of cards just collapses. And we see this
mm,
all the time. And right now, there's probably more foreclosures on the market than there was during 2008 and 2009. And that's a statistically provable fact. So investing in real estate, if you're doing everything as a house of cards and your liquidity is tight, it can be many people make millions out of real estate, but too many people just lose everything. And I see people that have accumulated millions of dollars lose everything. I just had a couple of clients recently that this happened to. They just over leveraged themselves, overextended themselves, couldn't borrow more money, and they just ended up losing everything. So real estate can be very profitable, it can be very risky. The upside of investing in a fund is your investment is really limited to the amount of money you put into the investment. So, like specifically, you're not having to borrow. Like if you put $200,000 into our fund, you don't have to borrow any money. You don't have to sign any personal guarantees. In the worst case, that you didn't get your $200,000 back, you've only lost that money. But if you put that money into a property that you control and everything goes wrong, your credit is destroyed, right? If they sell that property at a loss, they're going to come after your home, right? You will never be able to do it again. And essentially, all of your savings are gone. All right, and not all your credit is gone, and your opportunities are significantly less than they were before, and it's really hard to get your foot back on the ladder. The other thing is, there's a lot
mm,
of people that are investing in smaller investment properties. They're not making like enormous great returns. They might be making 7 or 8%, but if mortgage rates go above that, which they have done for the last few years, then again they're struggling with the payments. They still need to pay the taxes and insurance. So it's if they're lucky on a good day ever, they might be making 6 or 7% return on investment on their actual cash invested, not the cap rate. The cap rate is the overall net cash flow based on the value. The return on investment, the IRR, is the physical cash on cash return for the money they put in versus what they're getting out. People don't always understand the difference. So the irony of investing in a fund where you have less risk is our returns are almost 2 to 3 times what you're making by doing it yourself with a fraction
mm,
of the risk. All real estate investments carry risk. To say that like something is risk free, well, that would be ridiculous. But considering that all investment carry risk, would you rather invest your money and make 18 to 20% and have no other risk than the money that you invested? Or would you rather invest your money to make 8 or 9%? And if something goes wrong, you're only ever 2 or 3 bad decisions away from losing just about everything. You end up losing the property, you end up losing your investment, you end up getting sued, your credit is destroyed, and now everything is very, very hard to get back on the ladder. So
mm,
I would say if you have the opportunity to invest in a company like mine, where you have seasoned industry professionals with 20, 30 years experience, where we line up great opportunities, where our projects are fully funded from the day they start, so that we know there's no liquidity issues. And it's a much safer investment, it's a much riskier investment, and it's a higher yielding investment. So
mm.
that's probably why I think it's better to invest in a fund, company like mine, than to do it on your own.
That makes sense. So why invest with crypto as opposed to using fiat currency?
All right, well, there's honestly the advantages are almost very similar, but the disadvantages is, as we know, inflation lowers the value of the dollar, but it's creating value in crypto. A lot of people are moving their money out of the dollar, out of the banking system due to taxes, government oversight, concerns of a digital currency, and then moving their money into crypto because it's widely believed that crypto is going to continue to rise in value. But crypto, just like the stock market, can crash, and we've seen it crash. You and I have seen mutual friends lose as much money as they made in crypto. So the advantages of investing in crypto is essentially that, say, for example, you're making a lot of money in your Bitcoin and what have you, you can take those profits, invest those with us, offset the gain, have a secure real estate investment that's one, high yielding, and two, still a very secure investment because even if the market was to crash tomorrow, that building will still be there and it'll still be generating wealth, it'll still be generating income, it'll still have appreciation and value, right? Whereas if you do it with a fiat currency, it's harder to manage the taxable income, and it's generally speaking, the people have in cash, that's money they need. The money that you have in your crypto is money that you're really saving. That's not money that you need. So I think crypto definitely has a lot of advantages, and we're seeing that even the current administration, Donald Trump, I just saw his son Don Jr. talking the other day about how when the banks didn't want to do business with them anymore, they turned to the crypto markets because there's a lot of creative things you can do with cryptocurrencies and crypto financing that you can't necessarily do with fiat currency. So I think crypto definitely has a lot of advantages.
And I'm glad you brought up the Trump administration because in recent news, I just saw that they're more in support of crypto. Do you think that adds value to your business model?
Absolutely. Absolutely. I mean, Donald Trump is very, very big on crypto. As you know, Elon Musk is very, very big on crypto. Both have launched different coins. So I would say that even the World Economic Forum is hugely behind crypto. I think we're going to see a world ahead of us where we're going to have digital currencies, which I'm against, and a lot of government overreach, which is I also don't think is a good thing. And crypto is like an independent form of currency. It's not regulated the same way as fiat currency or paper money. So you have a lot more freedom with crypto. So I think we're going to see cryptocurrencies continue to rise.
That makes sense. Okay, well, with risk, I mean, with rewards, there's always risk, right? So, what are the risk and rewards of investing in a real estate fund with crypto?
Okay, well, the risk reward, in my opinion, I don't think it's significantly different whether or not you invest in crypto or like fiat or like US dollars. The risk is pretty much the same. Like with any fund, there's always the possibility the markets drop, things go horribly wrong, and you could lose your investment. But that's the same with any standard investment in real estate. If you borrow money, you have an LLC for a reason. It limits your liability. But to an extent, unless you personally guarantee. So the risks really are management of the projects. If the projects are well managed, they will continue to appreciate. If they're badly managed, then you're not going to see the benefits. So you have the risk there, but the risk is mitigated by everything that we do is real estate backed. So it's like if you invest in digital currencies like Bitcoin or tokens or any kind of speculative investment, one little crash, and before you know it, we've seen it in crypto, we've seen it in the stock market, we've seen it in real estate, we've seen it in every genre of investment. Things go horribly wrong and the market collapses. But the good thing about tying crypto to real estate is if you have $100 million portfolio, it doesn't matter how much the value drops, it's still got the real estate portfolio. It's backed by something. I always kind of like to compare it to the gold standard. Back in the day when the dollar was backed by gold and gold continued to rise, we had a strong dollar. Now the dollar is tied to the capital market, which is an international currency. If any big country in Europe or on the American continent, if they suddenly have a crash, then it pushes down the value of our dollar, it drives up inflation, and the cost of everything suddenly costs more. So I would say the risks are, there's always a risk in any investment, as I said before, but at the same time, the rewards I think are great because on the one hand, yes, you could probably like we know traders that are making 60, 70% of their money, but these guys are professionals that know what they're doing. Right?
Mm,
Everyone else, if they're making 10, 11, 12, or even 20%, they won't do it every single month. Or
mm.
so we can create a real estate backed security that has collateral behind it, but at the same
Yeah,
time, it's going to be a
utility.
very high and steady return, and that return is going to continue to grow. So you're going to see growth. So I think the rewards are significant because our returns are high. They are collateralized returns, and I wouldn't consider anything we're doing to be a risky investment. When you look at any form of investment, there's different levels. There's low risk, medium risk, and high risk. Low risk is generally a low return, but it's like investing in bonds or putting into a mutual fund or into an endowment. You're going to make 3 or 4% on your money every year, maybe 5 or 6, but it's not particularly exciting, but it's more than you're going to make in the bank. A medium risk investment, I would say real estate is a medium risk, is we can generate north of 18-20% returns, even into the 30-40%, depending on how we manage. However, uh, there are some risks, like I said, the market, like everything is always going to be market related, right? So no one is immune to the market. Now, trading stocks, trading crypto on their own, that's high risk, high reward. Because at any day, and I think you and I have a mutual friend that could definitely relate to this, is that market can suddenly drop. Something happens in the capital market, something happened in the world, something happens in the election, there's a war that comes out, a pandemic that comes out, and before you know it, the value of that investment suddenly drops. That's high risk.
Mm.
So you definitely want to moderate your investments and split in between some low risk, knowing that very little can go wrong, but at least you're accumulating some wealth. All right. Medium risk is where you definitely want to concentrate the majority of your investable income because there's a small amount of risk, but the earnings are very steady. And you want to have a small percentage in your high risk because it doesn't hurt to gamble a little bit. But anyone we know that gambles too heavily, I've seen some very wealthy people lose everything because they had all of their money in the capital markets, the markets dropped, and they were wiped out. Especially if you're buying on margin, where where you're basically you have credit, and now you've got to pay that back.
Yeah, man. I seen, even kids on the news, do those options trading and those margins trading, and it just, they ended up so in debt. I think one kid actually killed himself. He was like 18 years old or something like that. It was I think, yeah, it was like 180,000 or something like that. Like he was in debt for, he just ended up killing himself. So it was kind of sad to see. But I'm with you as far as like having the utility, where the token is actually backed by a tangible asset that gives it that value. So, which kind of a good segue into my next question. Can you explain how the tokens appreciate in value?
Well, they appreciate different ways. Like, for example, most of the projects that we're looking at are construction backed. We will be looking at some cash flowing assets. I typically, if I'm going to buy a cash flowing asset for my company, I prefer to buy something in distress so I can turn it around. I'm going to buy it at a much lower price. And by the time we turn it around, we're in our double-digit returns. I don't
Mm.
like buying stabilized, what I call cap rate investments, because you buy them at 5-6%, interest rates are 7 or 8%. Where are you making any money? So, but it's not uncommon to find a stabilized asset that's fallen into bankruptcy because they can't make their interest payments. Now there's an opportunity to buy it below market. We come in, we make improvements to the building, we bring up the rents. Uh, because we got it at a lower valuation, our leverage is going to be significantly lower. Our cash on cash is going to be significantly higher, and we turn that into a good investment. So that's how we make like the in cash flowing assets, that's how we make them kind of appreciate in value. I really like construction projects. When you buy land and it's unentitled, and now you go and get it shovel ready. By the time you're shovel ready with all your planning permits, everything in place, you've at least doubled, in some cases tripled the value of the property. Now you start
Mm.
going vertical and you are adding value every single time you add another floor. You're adding value every day you're moving along. So I always say that construction is the oil of real estate. Like if you found an oil well in your backyard, you're going to be a billionaire. Well, the most amount of money you can make in real estate is in mass home development, which is why if you walk around Miami today, you'll see there are high-rise cranes absolutely everywhere. And Los Angeles downtown, as you saw, they overbuilt it, but they made a lot of money building it. So development is definitely where you're going to make a lot more money. So when we go into a project, each time that project advances, the value of your investment increases. So
Mm,
every time we hit what's called a milestone, we will do new appraisals, we'll update the valuations on everything, and we submit those into our market maker. And then they say, all right, fine, we had a valuation of say 50 million 6 months ago, based on X amount of work that's been done, X amount of money spent, everything accounted for. That valuation is today now 100 million. Now, if I've taken a
mm,
property from 50 million to 100 million, I have doubled your investment.
mm.
And you will be grateful for that. Another
Absolutely, right?
another way we do that is by hyping the market. For example, if people see what we're doing and they like what they're doing, they're going to want to buy more of our tokens. As they want to buy more of our tokens, it creates what's called a trading history. And then the more of a trading history we have, the tokens appreciate in value. So we're launching a new token at the end of this year. It's going to be the StatsCat token, and we're actually working on that right now. And we have probably $200 or $300 million worth of projects that are going to be going into that project. So we're launching that token at a penny. We're going to be issuing about at least we talked about issuing about 100 billion tokens or something like that. It's a crazy amount. It's definitely going to be a big amount because we have about $500 million worth of projects that we want to bring in. And if we sign a couple more projects, it's going to be up to the $1 billion range. So we don't need to raise all that money at once. If we raise that money over, say, 3 to 5 years, that's perfectly okay with us. There's no need for us to do it in one hit. But as we take on those projects and people are seeing that we're adding more and more projects, they're going to keep wanting to buy our tokens and trade it. And as they do that, your token valuation is going to go from the penny that you bought it at to 10 cents, 20 cents, 50 cents. So on the one hand, we have what's called a market valuation based on our tradable history. And on the other hand, we'll have a market valuation based on our assets. And it's not uncommon that a public company trades much higher than their tangible assets. That's very common. And that's based on the desirability in the market of that company. We're going to be doing a lot of marketing, a lot of TV and media, a lot of social media to let people know everything we're doing with our projects. And that's definitely going to accelerate the value of your investment in our tokens. So at a starting point of a penny, if I take your penny and I turn it into a dollar, and your minimum investment is $100, you do that math, you've just made several $1,000s right there, right there. So it's definitely going to be a good investment. And Bitcoin, when it started like pennies and dollars, and it's just grown and grown and
Mm.
grown. Now it's at $100,000. I'm not saying our tokens will ever be that high, probably not, but we can definitely add so much in transit value through the collateral, through the value increase, through the tradability, that you're definitely going to see a lot of value add in the investment in our tokens.
I'm glad you brought up Bitcoin because when you talked about having such a large market cap with all those coins you're looking to distribute, right? Do you and in comparison to Bitcoin that has a small market cap and you see how, valuable it is, and I believe it's because of the amount of the supply in the marketplace. So do you think that having such a large amount of coins available in the marketplace will dilute its value?
Do you know the opposite? Because first of all, we're not releasing them all in one go. We're going to limit the releases and phase them out. So that's number one. Number two, because of the size of the transactions that we're doing, you're investing in real estate. You're investing in real estate. We're using your crypto. The thing is, you can't do $300 million transactions trying to raise $100 and $200. You need to be able to raise a large amount of money. So we're going to probably be releasing those tokens in phases. So we're not going to release them all at once. But after, say, 3 months or 6 months, we're going to be releasing those tokens at a higher price. So it's going to follow the trading history, marketability value of the company. So yes, it is a big number, but we're not trying to do it all at once.
Okay, that makes sense. Okay, well, there's another word that I particularly am a big fan of when it comes to investing, and that's called dividends. I was actually watching a documentary about Warren Buffett, how he gets like 1 or 200 million just from Coca-Cola dividends, and Michael Jordan gets $330 million a year from Nike in dividends. It's insane. It's insane. But, so my question to you is, do your tokens pay investor dividends?
Yes, they do. So
Tell
our
me more.
tokens will be paying dividends, and they will be smaller at first because most of what we're doing has kind of like a 2-year development stage. So
Uh-huh.
though we will be paying dividends years 1 and 2, they will significantly increase in years 3, 5, 7, 8, 9, 10. And we look at our company as essentially a 10-year investment, but at the end of that 10 years, people will have the opportunity to cash out or renew. So, but yeah, our dividends will be pretty high. And I would say we lost you there. I would say that, and as you know, on our Augusta project, we're offering an 18% dividend, right? Which we're paying
Mhm.
12% current, and we defer 6% to completion of the project. So we will
Got
build in dividends. So it's a very strong kind of opportunity that we're offering because it's real estate backed. Is the I guess the industry phrase for that is real world assets backed. That's I think the industry term they call it now, right?
The
Real world
utility,
assets
utility?
literally means real estate. So,
Yeah.
and so it means that we can't really endure a significant drop in value because there would have to be the lowest you could return to would be the market value of the real estate. You couldn't really trade much below that. I mean, anything is possible, but it's unlikely because we would have those valuations on our company. So you can't value gold $30,000 a kilo when it's 53 to $60,000 a kilo. Might be more than that. I think that's close to 80. Gold's definitely gone up a lot. And uh, so that's one thing. And the other thing is, and not only is it real estate backed, we're also paying the dividends. So we expect our investors to, one, see a significant increase in value in their token, to see a significant increase in value in the real estate, and we're going to see steady growth in our dividends.
Love it. Love it. Well, that's amazing news, man. Well, I'll definitely be buying some tokens. And if you want to, throw me a couple just as a tip, that's
As
that's
my
always
wife with it.
good.
This is the Russian way, like that's the Russian way.
Exactly.
They're like, money, 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 money.
Right, right. So, okay. So tell me, how is the market value? How is market valuation determined?
I think we covered that a little bit. So market value for our token is essentially based on one, the value of the real estate that we put in, based on where that real estate is currently at in its each phase. So, and we will be doing incremental valuations and updating our token accordingly. And then the secondary factor is market demand. The more people want to buy and trade our tokens, the more it will go up. So kind of like Bitcoin, when if people are dumping our tokens, then the price is going to fall. If people are buying our tokens, the price is going to rise. If they're trading our tokens, the price is going to continue to rise. My goal is to start at a penny because that's where we'll get a lot of people. Listen, we're going to issue a lot of tokens, all right, and they're going to be at 1 cent. All right, I'm English, so I call it a penny, but it's 1 cent, I guess, the correct phrase. So, but the minimum purchase price is 100. So you have to buy $100 worth of tokens in order to get your foot into the deal. So
Mm.
those tokens, the more and more people buying our tokens, like if you buy 1,000 and someone else buys 1,000, someone else buys 1,000, that's tradable history. So as more people buy our tokens, the prices will go from a penny to 2 or 3 because of the market demand, right? That's called the market maker. So as the demand increases, if more people are buying than selling, and we're continuing to add new assets and continuing to grow the financial strength of the company, then our valuation is going to climb. It's going to climb very steadily. And I think it will go from 1 cent, or penny as I like to call it, right, to 10, 20, and 30 cents very quickly. And once we get to that $1 valuation, right, you've just made a lot of money.
Gotcha, gotcha. Now that makes a lot of sense. And you're definitely, sharing a lot of information. So for everyone viewing, man, I hope he's not overloading you with all this information. He's super knowledgeable and this information is super valuable and you can definitely use it for your business. I promise you. But now, but crypto-based real estate is so new. I'm just curious to know, like, is it regulated in any way? Can you talk a little bit about that?
So I just want to like let people know I'm a little crazy sometimes.
Yeah.
When you get a bit older and a little wiser, it's like if you don't have a sense of humor, if you don't kind of let like I would say let my hair down, but there's not much of it to let down. But you
Yeah.
gotta have you gotta Sorry, what was your question? Can you repeat that,
No,
please?
I was just talking about the regulations of crypto-based real estate. You know, it being so new, I'm just curious to identify what are the regulations and if there is of any, how do you navigate around that?
All right, there is regulations in just about everything. So the way tokens are regulated, you're like, let's just say this is the SEC, right? Here's the SEC, right? Anything that's like
Mhm.
an IPO, bulletin board, pink sheets, new release, anything that's a public company is here
Mhm.
above the SEC radar. So
Yeah.
tokens, because it's worldwide, because it's a private company, come about, let's say this is the floor here, like where the screen is, right?
Yeah.
Tokens are right here. They're right below the SEC radar, and they stay there. But we do what's called
Mhm.
a PPM, private placement mandate, and that needs to be reviewed by an SEC attorney, all right, to show that it's compliant, legal, there's no money laundering, no fraud, et cetera, et cetera, et cetera, et cetera. All right. But if you break the law and you do something wrong, like if you take people's money, you spend it on anything as represented, same as a public company, all right, then you immediately go above that SEC radar and you're now treated equal to securities fraud. So it's very
Mm.
so your regulation is right here. But if you do anything wrong, you immediately get upgraded to we're going to have a serious look at you. So the regulation is so you run any company that's operating the tokens, you want to run it the same way as you would run an IPO. You want to have certified financials, you want to have SEC attorneys, you want to have detailed sets of books and accounting, you want to have a proper board of directors, you want to have everything done complicitly. For example, our attorney is our CFO. So he handles
Mm.
all funds, he writes all checks, he handles all books and records, he handles all of that stuff. We don't touch that. I am horrible at maintaining books and records. If anyone knows me well, I'm good at business, I'm good at negotiations, I'm good at finding good opportunities, I'm great at visionary, I'm great at having a great uh, big picture as to how everything comes together. But bookkeeping, management, maintenance, these are not my things. These are not my gifts. I don't want to do this. I don't want to trust someone who's like a layperson to do that. They make a mistake and it's my ass on the line. So I entrust that to the licensed professionals, attorneys, CPAs, etc. I so that everything is done in such a way in which I can lose no sleep at night. They are responsible, they are liable, they need to make sure everything is done correctly. This way, when God forbid there's any issue, we have an immediate solution, we have immediate verification, we can justify everything. And we also have everything is looked at by multiple eyes. I see everything, my partners see everything, our attorneys see everything, we have an SEC attorney who sees everything, we have different layers. So we're always double, triple, quadruple checking everything that we do to make sure compliance is never an issue because that's one element you just can't afford to take that risk.
Mm. Okay. Now that makes sense. Yeah, you definitely want to focus on your strengths and delegate your weaknesses and having a multiple set of eyes on the same thing. You'd be surprised what you may have missed on the first or second or even third go around that you did on your own. So I could definitely
Exactly.
appreciate that.
Exactly.
Okay. Now, my next question is a four-part question, so I'm going to ask it real slow. Okay. So, what is the minimum investment amount? Okay, so that's the first question. Now, where can investors buy these tokens? Okay, now when they do buy the tokens, where are the funds deposited? And lastly, what are the financial records available to the investors?
Oh,
So what's the minimum amount? Where can they buy it? When they buy it, where are the funds deposited? And are the financial records available to the investors?
okay. That
Mhm.
is a four-part question. Wow.
Mhm.
All right, let's start with the first one. So, how
But
much?
it kind of
Uh,
leads into each other, right? So when
they
you
kind of
answer it,
do.
it kind of like
They
it's
kind of
in.
do. All right. So, all right. Well, I have two answers to that question, to the first one. So, if
Mhm.
we're looking at our Augusta project, that was like an experimental run for us. Is what you call you have to do a trial and error to kind of learn the right way, the wrong way, the how-tos to navigate what works and what doesn't. So, our Augusta project, we didn't want to have too many people involved, so we limited it. So we
Mhm.
limited it to 10,000 tokens at $1,000 a token, right? And
Mhm.
which basically came to $10 million. And
Mm.
we basically said the minimum investment in that was $10,000. We did that because we didn't want to have a huge amount of people come into it. So that was done intentionally. The
Got it.
new token that we're launching, so that was SXP AUG, which is presently listed on KXCO in Australia. All right. So
Mhm.
it's also available on Polygon as well. You can buy it, which is the Polygon is for the US market, the KXCO is for the international market.
Okay.
Because there's different restrictions in the United States versus overseas. All right.
Mm.
So that's the new one we're launching, which is the SatsCap token. The SatsCap token is going to be the launch price is going to be 1 cent, but with a minimum $100 investment. All right. And the
Mm.
reason for that is it's just we have to pay processing fees, so it just doesn't justify people buying anything for less than $100. So essentially, for 1 cent, you're buying $100 worth of tokens. And if I take your 1 cent and turn that into 2 cents, I hope you'll be very happy, right?
Got it.
Because I've doubled your money. So
Exactly.
that's the pricing point. So for our new token, which is going to be available, I would say probably by the end of the year. It may be sooner, but definitely by the end of the year. And that's going to be SAXCAP, right? Our current token is
Mm.
SXPAUG, right? I'm English. I talk with my hands.
I got you. I got you.
So and we discussed that the new one's going to be a minimum of $100. The way you can buy it. Now, you'll be able to buy it on various different exchanges. We have one of our own, which is called Crypto Real Key. That's one example. There are other exchanges that you can buy it on. And and typically what happens is when you buy it or where you buy it,
Mhm.
you connect your digital wallet, Coinbase, MetaMask, anything like that. You connect your
Mhm.
digital wallet to the platform that you're buying it through, all right? And then you buy it using your Bitcoin, Ethereum, whatever you want to use, right? So that's the
Mm.
way it works. You basically connect your wallet, you review the information, you put in the amount, and then you basically pay for it. You can also pay for it using fiat currency with US dollars. You can buy any currency from any country in the world, and you can do most of that on your phone. American investors
Mm.
need to be accredited, but anyone else outside of the United States, that's not a requirement. So that covers the how much, the where, right? What was the other two questions? The other two questions were
But where, yeah, where the funds deposited and are the financial records available to
okay,
the
where are the
investor?
funds deposited? All of the funds go into a bank account that's controlled by our attorney. All right. So, and then the attorney will distribute the funds where applicable to the projects that we're working on. Yes, obviously we make money, we make fees for putting this all together. So any money that we're entitled to as far as that is being represented in the PPM that's income to us, that would obviously be paid to us at that time. All right. But so essentially it goes into the escrow, all right. Well, actually, it's not an escrow account, just for full disclosure. It goes into a management account that's managed by our CFO, who is also our attorney. And those funds then are distributed where applicable to the various different projects that we're involved in. And that's obviously in our discretion. And that's a board of directors conversation that we have. And that's how the funds are deposited and where they're deposited. As regarding accounts, yes, we do what's called, we will be issuing for our tokens, like periodically, like the minimum is yearly, so we will do it at least once a year. We may do it more frequently. And again, that's up to the accountants and bookkeepers who are handling that, but there will be what's called certified financials that will be available to investors that will have to attain those through our secure website. They will not be available to the general public as a public company would be, but they will be available to our investors and it will be provided to them physical hard copy and email at least once a year. And those financials will also be on our website, which once you have a login credential, you will then have access to.
Interesting. Okay. How does one go about making their own crypto token? I mean, I'm sure that was a process within itself, right? I mean, because when we were talking about it initially, it took you a couple months to finalize, right?
Yeah, it was definitely a learning curve. We expected it to be faster, but now we kind of understand the process. So going into it this time, there'll be less surprises, I believe. But there are basically agencies or investment banking firms that mint the token for you. But that's the final piece. Before that, you've got to do your PPM, your offering memorandum, your business plan, your investor agreements. You spend quite a lot of money in legal to do this. It's about $50,000 in legal on the best day ever. And then you will pay for the minting of the token based on the volume of the token. And then you have to pay to have it listed on an index where people can trade it. And then people need to know about it. So you've got to pay for the marketing. I would say realistically, you're looking at about a $250,000 investment on a small scale if you want to launch your own token. You can do it for less, but you're not going to have the results you want.
Gotcha. Okay. Okay.
I would say
Okay.
250 to $500,000 if you really want to make money. And a lot of that money goes into marketing. If you're not marketing it, if you're not putting out social media, if you're not going to events, then no one knows you exist. And that was definitely stunning. When we went into our first one with the SXP AUG token, we didn't really know everything. It was a learning curve. Now that we've had that token now for about, I think, give or take just under a year, we've definitely have learned things that we could have done better, things that needed to be improved, where we could spend the money more wisely, how we get it in front of people, what the objections are, what investor goals are. I think we definitely learned a lot, and we still spent like 200 grand on it. So, but I take it was a value education. We have basically pre-sold $5 million of that token. So it wasn't, and we have potential interest in the remaining right now. We're actually negotiating on the remaining five. But we've also contemplated we may just buy them ourselves, simply because we've spent so much money on this project already. We don't necessarily need to sell that remaining piece. So it's definitely a learning curve, and it's if you don't spend the money wisely, don't do it. It's like I have a lot of people that say to me, "Oh, I want to do a token." I'm like, "Are you willing to spend 200,000, 300,000?" "Oh no, I want to spend 20 or 50,000." Don't even bother. You're just throwing your money away.
I gotcha. That makes sense. What do you do for fun? What do you do like on your leisure time? I mean, with all this wealth of knowledge that you have, I mean, it sounds like you work more hours in a day than there are available, right? So, what do you do on your days off, or what do you do to relax and chill?
Are we not having fun?
Yeah. Hey, right. We're having fun right now. Yeah, we are. We are.
This is relax and chill. This is me not on the phone, not sending emails, not yelling at clients, not yelling at my partners, not yelling at my kids. No,
Mm.
he's not here right now. Not yelling at my cat. Yeah, to me, this is how I relax and have fun. If you don't
Mm.
love what you do, don't do it. It's Andrew Tate says it. I agree with him. You got to love what you do. You got to love who you are. If you want to worry about going to the beach, watching TV, I know so many people that run their own business that start at 9 and finish at 5, and they say, "Adam, I'm not making any money." I'm like, well, if you're gonna grow a business, if you're gonna grow an empire, you gotta love it, feel it, breathe it, enjoy it, fight for it. We all know it's not easy. We all know there are great days and bad days. We all know that money goes out so much before any comes in. If you need a rest, this isn't for you. Yeah. I mean, my wife and I love to go to the beach on a Sunday morning, right? We go and sit, and then we live right on the beach, so we like going to the beach. We like taking the kids on road trips. We like going out for dinners, just like everybody else, and having a good time and traveling. But typically, I go away. I take my wife. We turn a business trip into a mini vacay, right? And that's kind of how we do it because otherwise we'd never do anything and we wouldn't get any breaks. But for me, my life is my business. I want to retire young. I've worked incredibly hard since I was 16 years old. So at 51, I'm 35 years in. I think maybe another 8 or 9 years, turn 60, that's it, I'm out. And even then I don't really want to give this all up. My goal is and I think I may have mentioned this to you in the past. I want to launch my own magazine. I want to inspire people. I want to be a more encouraging young people to go out on their own, to be in business, to make money, to not be imprisoned by the system. I really want to be a motivator for the young generation to go out there and do it on their own. That's really my goal, to motivate and inspire people and to get people to do that. So even though I want to like retire from real estate and finance and the hustle and bustle, I'll never give it up. I'll be working until many, many, many years ahead of me. I'm just a workaholic. I enjoy it. And even then, I know for a fact someone will come to me and say, "Hey, Adam, I've got this great idea." And before you know it, I'll be deep into it and getting involved. It's just, I love building businesses. For me, running the business is not as fun as building the business. This is my drug. I don't drink. I've never done drugs. I don't smoke. Like Johnny
Hmm.
knows, Shayanne knows me. We were neighbors for quite a few years. So
Hmm.
creating, building, inventing, like conceptualizing, making this happen, this is my life. I mean, I remember one day we were living in Los Angeles, again, that same friend of ours having that piece of paper with a billion running across the top. If he's watching this, he's going to kill me after. And a blank piece of paper underneath. And if you remember, I said to him, we don't build a house starting with the roof. We build it
Hmm. I
starting with
remember.
the foundation. And then we put one brick on top of another until we get to the door and the windows. And then we keep going. And then we put the roof. I like to build from the ground up. It's always been a passion of mine. So to me, this is fun. This is relaxation. This is, even on the bad day, when everything's going wrong, this is what I live
Awesome, man. Well, listen, you are a wealth of knowledge. You are, a great entrepreneur, a great man. You know what I'm saying? And I'm sure, you're a great husband, great father. So all that combined, man, I'm sure nothing but the many more great things ahead of you. You know what I'm saying? So I want to say I appreciate your existence. Thank you for being not only a friend but a mentor to me as well. And if you can give I mean, the last statement you just made was a great piece of advice, but if you can give a piece of advice to someone trying to really, just just make it in today's society, and like you said, not fall victim to the system and really believe in themselves and chase their dreams and go to war, with the trials and tribulations of becoming a successful entrepreneur. What piece of advice can you give to that person looking to start?
Okay, hold on. Let me just go on Instagram and look up Ty Lopez. Give me one second. Or maybe Andrew Tate. Just give me a second. Instagram, Google. I would say that when I was young, when I was in school, when I was about 13 or 14 years old, I started a car cleaning route. I've never cleaned a car in my life. I came up with the idea and I called it Lone Star Car Cleaning. There we go. 'Cause I used to love watching all the Lone Ranger. So before your time, I think. And
Mhm.
so I started this car cleaning route and I hired a bunch of kids to go and clean each car for £2 or £3 on a Sunday morning, sometimes on a Saturday morning. And I was charging I'd knock on people's houses and I got them to all agree to give me the car clean, 10, £15. And I'm paying these kids £2, £3. And I'd have maybe 20 or 30 cars every weekend. Okay? That was my first business idea. I was probably 12 or 13 years old. Everyone laughed at me. Stupid guy knocking on doors, getting car cleaning routes. Meanwhile, I was making good money. And I sold that route when I was 16 or 17. Someone actually bought it from me and turned it into an actual business. When I
Mm.
started my phone business, when I left school, everybody laughed at me. They said, "You're crazy, you're dropping out of school." And I'm like, okay. Meanwhile, a year later, I'm living in a penthouse, I'm driving an Aston Martin, I'm flying on private jets, and I'm going to visit my friends in student housing, living like poor people or peasants, as our good friend Mr. Andrew Tate would say. And
Mm.
meanwhile, I'm staying in five-star hotels and living my best life. And they laughed at me still. When I moved to America, everyone laughed at me and said, "You won't survive 5 minutes." And there was the September 11th that happened. There was a big recession in 2008 that happened. There's been COVID that happened. We've seen a lot. Even you and I, as friends, and we've known each other now for like 8 or 9 years, maybe a bit longer. We've seen
Mhm.
so many ups and downs and highs and lows. And people around you will always say, "Hey, don't do it. Oh, you can't do that. Oh, this is impossible. Or give it up. Or, you've lost." Right? It was a good run. The best advice I would give to anyone starting out is running your own business is a passion. It's a labor of love. It's going to be the biggest part of your life for the rest of your life. Don't quit. Don't give up. Don't listen to the negative voices. Don't don't bury your head in the sand on a bad day. Everybody has them. All right. If you believe in yourself and you believe in what you can accomplish, and if you believe in what you want to do, then just keep swinging every single day, like Mike Tyson, like Rocky, like it's your last breath. Just come out and fight and fight and fight for what you want. Because if you keep standing and if you keep fighting, you will be successful and you will win. And that's the best advice I can give anyone. Because I know a lot of people that have made it, lost it, cried about it, got back up and done it again. And that includes myself, and it includes a lot of people that I know. It includes some of our mutual friends. And I think that's the most important thing that I can tell someone, because most people, when they start their own business, will fail the first time. They will fail the second time. They will fail the third time. They may fail the fourth, fifth, sixth, seventh, eighth, ninth, and 10th time. But eventually, they will get it right. And if you believe in yourself and you keep going, you will win and you'll be so happy that you carried that fight. Because a lot of people give in and they quit because it's very easy to quit. But there's successful people in business went through many hardships and they kept fighting to win.
Mm. Hey man, that one landed, that's for sure, man. I want to thank you again for your time, Adam. Thank you again for joining me on this journey as well. Looking forward to helping you with all your other endeavors. This has been another episode of Sleep is for Billionaires, the podcast, episode 158. I am your host, Shayanne Johnny Vegas Andujar, my man Adam Cohen. If you want to let the people know where they can find you, now's the time, my good brother.
You guys can find me on Instagram at Adam Cohen Today. You can find me on LinkedIn under my name, Adam S. Cohen. And if you want to go to my website, it is saxcap.com, SAXCAP, or adamcohentoday.com. You can find me there.
Looking, oh man, you make sure you follow this man. I'm telling you, man. Again, this is another episode of Sleep is for Billionaires, the podcast. Thank you, everyone, for tuning in. Make sure you like and subscribe to the channel, and make sure you watch this episode multiple times because he dropped so many jewels. You got to watch it 3 or 4 times to catch them all, man. Stay tuned for more episodes to come, and thank you for watching, ladies and gentlemen.
Thank you, Cheyenne. Thank you very much. Thank you for having me.
No problem.